Hello everyone. Today we're going to talk about Bitcoin. I remember my promise to do a review on oil, gold, and the S&P 500 index, and I will do my best to release all three of those reviews tomorrow. Today is Tuesday and we're looking at Bitcoin, which is trading around $77,000. Let's take a look at the chart. Here we have daily candles. What do we see? We see a very important level. I'm highlighting it with the cursor, $76,322. Previously, I marked it a bit incorrectly in earlier reviews. There it was $76,470. But that doesn't really change anything. This is the lowest candle close on April 8, 2025, from which the downward trend reversed into an upward one. And now we are testing this level from above after having moved away from it for some time. The growth stopped at the 200-day moving average, which is shown in orange on the chart. And if we now get a bounce off this level with a bullish engulfing pattern, then we have every chance not only to break through the 200-day moving average, but also to reach the $84,000 level and even $94,000, because it was precisely within this range, with the lower bound at 84 and the upper bound at 94, that Bitcoin was trading sideways from mid-November last year until the end of February this year. But right here and now, if we look at the chart up close, we see that Bitcoin has only red daily candles. It has come very close to the green 50-day moving average. And right now, this zone is key for support, because if we break below it, the movement could continue all the way down to 72,000, where the 100-day moving average lies. So for now, buying isn't really on the table, but there is still a chance that Bitcoin could reverse here and head somewhere up in this direction. Now let's remove all the markings and take a look at the weekly candles. Here the situation isn't very good. Look, last week closed with a bearish engulfing of the previous week, and we talked about having a technical growth target up to the base of this red week from January 26th of this year, around $87,000. So based on formal indicators, this scenario has now changed. Changed to what? To a scenario of decline toward the base of the green candle from April 20th of this year, which is around $74,000. This doesn't mean we can't reach the area of 87,000, but it does mean that here and now, based on the weekly candles, the priority is toward the 74,000 area. So, at this point, it's not possible to open long positions here. Finally, let's take a look at the monthly candles. The situation on the monthly candles is also quite dangerous. Notice that the May candle went significantly higher than the opening point of the red February candle. And if, though we don't yet know how it will end, if it were possible to close May above the February opening point, that would be a bullish engulfing pattern with a technical growth target in the area of $87,000 to $88,000 up to the base of the January candle. But if, after such growth, the May candle suddenly closes with a red body, the risks of a decline toward the 50-month moving average, $59,000, will increase significantly. At the very least, the target would then be to update the February low, which as of today, and as of yesterday as well, is $60,000. The February low will not change anymore. But there is still time until the end of May, and there is a chance that the May candle will close above February's opening point. For that, we need to see a close above $78,742 in May, and then there is a chance for continued growth toward the $87,000 to $88,000 range and potentially even $94,000. For now, we are waiting to see how events unfold. Let's return once more to the daily candles for just a second and highlight again that the key support zone for Bitcoin is $76,322. If we see a close below this level, and especially below the 50-day moving average, then our chances of a decline toward the 100-day moving average in the area of 72,000 will sharply increase. However, if in the next few days, today or tomorrow, we see an engulfing of yesterday's bearish candle after the key support at 76,322 was tested from above, then our chances will significantly increase not only for a return to the 200-day moving average, but also to the levels of $84,000 and even $94,000. I would just like to remind you that we did this analysis on the QuantFury platform. Here, you don't pay any commissions. You can trade not only cryptocurrencies, but also stock market shares, forex currencies, commodities, gold, oil, gas, ETF funds, and many other financial instruments, including the Dow Jones Index, S&P 500, and much more. Subscribe to the channel. See you tomorrow. I really hope so. Goodbye.